Welcome back to the Cobra Trading Channel, everyone, where we focus on people, passion, and platforms. I'm Alex Bustos, and today you're gonna learn about candlesticks. The reason a lot of traders utilize candlesticks is because it tells you what price is doing. So it's important to understand how to read them so that way you can understand where price has been, how it's acting, and get a read on it. So we're gonna focus on these candlesticks right here as an example. And I want you to focus on these two top ones. We're gonna focus on the green candlestick. On the bottom end, you'll see it's at $1. On the top end, you'll see it's at $2. Anytime a candlestick is green, you need to know that it opened on the lower end, meaning it opened up at $1 and it reached to and closed at $2. On a red candlestick, it's different. It's the opposite. It actually opened higher. It opened at $2 and closed at $1. So it's just the reverse of a green candlestick. Now, if you look at this lower half, you'll see we have a green candlestick. And what do we talk about? If it's green, it opened on the lower end and it closes on the top end. In this case, this opened at $1 and it closed at $2. But what is this line above it and below it? Those are called wicks. And the wicks of the candle show you how high it went or how low it went before it closed. So in this case, sure, the stock opened at $1, but at some point it dropped to 90 cents. And at some point it reached $2.50, but it closed midway at $2. So did it close at its peak like it did here in this example? In this example, it opened at $1, didn't go any lower, just opened at $1, shot straight up, and closed at $2 at the high. In this example, it opened at $2, didn't go higher, just shot straight down. So it opened, tanked, and closed at $1, didn't go lower. Now, if you look at this red candle here with the wicks, remember, if it's a red candle, the open is on top, the close is on bottom. So it opened at $2. It closed at $1, but we see there's a wick above and a long wick below. This shows us that at some point it peaked. After it opened at $2, it actually popped just for a quick second, barely above $2, just a little bit above $2. We'll call it 205. And then it dropped at some point lower than it closed to 70 cents. But it actually closed and ended on that candle at $1. These candlesticks are very important for you to understand because you're probably thinking about it now like, oh, now I know where a stock has been. I know how strong it is, because if a stock opened at $1 and just shot straight up, never dropped and went to $2 and closed, that indicates there could be strength, right? It's possible. Of course, one candlestick does not tell you the whole story. You need multiple candlesticks. Right now, you're just learning what one means. So if you see a stock that opens at $2 and just goes straight down, you see a candlestick just like this, you know that there's some selling pressure. But if you see something that's a little in between, you might know, I know that the stock has strength, but it actually closed lower. It could get you to see the stock different. So this is very important for you to understand, and keep looking to learn more and more about candlesticks, because the clearer the picture is for you, the easier it is for you to make a decision. Now you have a better understanding of how to look at candlesticks, and you can decide, do you want to use these in your own trading? If you have any questions on how to set any of that up on your platform, reach out to cobratrading.com, click the live chat feature. We're happy to help you in any way that we can, even if you're not a client. And be sure to like and subscribe the video because we have more content coming your way.